Hello, traders. It's 8:02 a.m. Chicago time. Let me double check to make sure that, yes, it's episode number 1822. Thanks for joining me today on Wednesday, the 19th of August, 2020. Sadly, today is the day my daughter is moving into her dormitories in university. Um, so I'm spending the afternoon doing that. No trading today. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall market stance, if I can get to the right screen, the overall market stance is relatively mixed to bullish today. Really, the S&P is only up 3 ticks. The Nasdaq is off 29 and a half points or 0.26%. Crude is off 1.25% or 54 cents in the October contract. Remember, October is now the front month. Gold is off $15.50, trading at $1,997.60 in the December contract. The leader today is Euro stocks up 83 points or 0.65%. Well, no, the DAX is up 83 points, 0.65%. The Euro stocks are up 21 points or 0.64%. That's where we stand today. We do see that the 10-year notes and the bonds are up. So we have a bit of a kind of a mixed bag, as I said. In terms of what's on the calendar today, really, we don't have much. We did get some numbers, the inflation rate out of the UK or out of Great Britain, as well as the Eurozone and Canada. We get crude oil inventories at 10:30 Eastern, and then we get FOMC minutes, which can be movers, but this last FOMC didn't have much to offer. That's at 2 p.m. Chicago, 2 p.m. Eastern time. In getting this, getting you back to your prep as quickly as possible, let's dive right into the review segment. Here we go. And yesterday, the primary scenario was looking for a pullback. Now, this is all pretty much, every day is kind of the same because we're pushing new all-time highs. The expectation yesterday is a small pullback. This is kind of fuzzy, isn't it? A small pullback into the 3380 area or so, and then a pop higher looking for new highs, a push into 91. That's what I was looking for. That's the stock zone right here that I outlined, 91. And then just resting for the rest of the session. The secondary is a push into 91 and a pullback and a drop into the prior day's range, into this range right here. So that's where we left it. Here's what actually happened. We had quite a dip yesterday. We did push into the 91 area, pushed early into the 91 area, and then we moved back into the prior day's range and Monday's range, and expected it to the secondary scenario was it was expected to kind of falter in here and test the value area and then bounce back up. But what we saw is it fell below Monday's range and it went right to the point of control, of last Friday, right on the dot. And held the 65 quarter to the tick basically, and then started to walk itself back up to the top of the range, back to 91, again retesting that, and then essentially having a P shape, holding a P shape, which was basically short covering of late shorts probably as the sell-off reversed. We're in the depths of summer trading. I mean, it's pretty much a grind. The move down was nice. I was able to catch a short off of it back into the prior day's range. Early on, as it failed, there was a lot of liquidity at the 90. There was a lot of liquidity at the 90 plus an iceberg up there. Traded about 1,600 contracts on this push higher. And then as it started to rotate down, it fell through the mid. It became a scalp short for a run into the prior day's range. That was the key trade of yesterday, was this short. And then we ground ourselves. We started to grind all the way back up, and we did what is unsurprisingly another V bottom reversal, V bottom reversal to the upside. We've seen a lot of these. Again, tested the prior day's point of control, breached the IB low, breached the IB high. We had a neutral normal day with a P-shaped profile, essentially a market that's saying it is yet not ready to test lower prices. We still have the 3,400 above us, and the next area up is the 96.75, which is a measured move target. So that's where we stand. That's where we stood yesterday. The volume yesterday was not all that great. It was better than Monday's volume, but we had 789,000 contracts, which is about 30%, a little under 30% below what would normally be expected. Again, we're in the depth of summer trading currently, and there's not much catalyst in the market. Notice that we pushed back above the open by the close, and the delta was basically at zero. The aggressors from yesterday's open to yesterday's close were pretty much balanced out. So this is likely to continue to grind up again, rejecting lower prices lower than Monday's low. Those prices were rejected, and so the path of least resistance continues to be higher despite multiple calls for reversal by macro guys and guys who like to, for some reason, like to predict the market a week from today. When to me, it's like predicting the weather. It takes so little um, it takes a change of 1 mile per hour in wind speed to completely change the weather for next week. This is a lot like that. To me, the path of least resistance is up. And so the market keeps proving again and again that it's not willing to accept lower prices. It's not willing to migrate value lower. And so we continue to squeeze higher. And unless we find sellers, in other words, unless we push and find an excess at the high, retest it, and then really have a 1.5–2% drop type of day, it's really there's nothing to spook the longs here. A lot of liquidity in the markets, and it continues, and so there's no reason to put money anywhere else. That's how I see it. So to me, just on the short side, it's on the short side, it's really important to just respond to what price is currently telling you, and the best way to do that, in my opinion, is to watch for the migration of value, the migration of the point of control. Value in this chart is in blue. This is RTH value. You can see that we're accepting higher, although low volume, we're accepting higher and higher prices. The market does not create a high volume node like this or a point of control if people don't think the price is fair. If the price is not fair, they just don't trade. And so that leaves you with a low volume node like this. And so in my opinion, as long as the market keeps pushing value, notice I'm not saying price action. I'm not looking for higher highs, higher lows, essentially. I'm looking for how the market is accepting volume at price. Is it moving it higher? Are we accepting that this is a value price? Until it stops doing that, the shorts need to be looked at as very short-term scalp type setups. And so just remember, many fortunes have been lost advocating for the short side in this run up, and many people who are um, aggressive about being short are probably not with us and not able to trade because of that. Please just pay attention to what it's saying rather than what you think it should say. Okay. So anyway, I'll stop preaching. I just want you to be realistic about your expectations of the market and of yourself and yourself. And at some point, it is likely to turn. The market does its price discovery both ways. But if you look at the blues here, we're moving up, moving up. We had a slight move down, but then we're moving up. Oops, moving up again, moving up again. This is the point of control and value migrating up. A nice healthy pullback here that's broken to the upside. So what we've done is we've pushed up, we've continued to create these flags. We push up, we flag down, we push up, we flag down. That's what the market has been doing. So in order to instill that idea in you, and we don't know when it'll stop, but the market will give us a few clues before it stops doing that. I look at the composite for that, and the composite's showing me that it's just, week after week, these boxes are weekly boxes. Okay, these are weekly boxes, and the gray and they flip from gray, light gray to dark gray, month to month. So you can see the weeklies, one time frame up, 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 one time frame up. No reason to be bearish in the intermediate term, maybe short term, not even a day, is paying off. It's more scalp-ish overall. So the market's really holding steady and is pushing new all-time highs. And so there's no reason to kind of advocate for or make a point or fight people to explain the short side. Again, just be tempered with your expectations these days. It is summer trading. August is traditionally, well, August is traditionally a month where I go off on vacation. Not this year though. And for the last couple of years, some surprise has occurred. Last year was the trade wars and things like that, but this year it's been fairly quiet. Let's get into what's expected for today and wrap up. So what we're looking at here is an all sessions chart. This is looking at the day session as well, the RTH session, and with the orange profile is the full session. So I'm plotting both and I'm looking at the action from both. You could see yesterday's dip was relatively sizable, pulled all the way back to the 65 stock zone down there. That zone's been there a while. And this morning it has pushed higher, made new all-time highs again, pushing the high to 93.75. The volume this morning is relatively low, 168,000 compared to prior sessions, prior overnight sessions. Really, it seems like in the last week or so, somebody just pulled the brakes on the markets overall. Not the Nasdaq. The Nasdaq's still trucking along, still making new all-time highs pretty aggressively. But the S&P has been relatively quiet, and there's been some discord between the industrials, the Dow Jones index, and the others. And especially the RTY or the Russell 2000 has been quite laggy and unable to push as much as the major indices have been. Let me get rid of this trend line. And so what are we expecting for today? We have pushed the high yet again. We are opening in value in range. The expectation this morning is the usual open auction. By the way, we spent most of the evening above yesterday's close, so inventory is long. I'm expecting an open auction that pulls back into yesterday's range, pushes down into the 85 area, consolidates, looking for it to come back and then squeeze this weak high that we have here in the overnight session. I'm looking for that to be breached on the way to 96. The 96 stock zone consolidate, and I expect us to take out the 3,400 today and poke through before coming back down and finishing somewhere below 3,400. I expect, that it's been making good progress all along. That gives us about 15 to 20 points of range, which is kind of wide for the action that we've seen lately. But this is what I'm expecting today. The secondary is an open that goes back to the overnight point of control, pushes the overnight high, comes back, consolidates in here, and then grinds its way up into the afternoon today. The third scenario, we are not in a gap, but I'm going to throw in a third scenario in that, and it's a sell scenario, is an open that pushes higher, that tests, impulses down, consolidates down here at yesterday's point of control, and starts working itself down the flagpole before it reaches about 20 to 22 points of range and then consolidates. This is a relatively low probability scenario, but we are getting close to the century figure, and we've seen quite a bit of liquidity come into the market and hold steady into the session. So as we're getting closer to 3,400, the heat map shows more and more liquidity as offers are being put out, as profit taking kicks in, and when that starts to kick in, it has a tendency to invite others and then eventually to accelerate. But overall, pretty dull trade. Uh, pretty light volume. This is to be expected of summer trading. This is a good time to work on other aspects of trading, like perfecting your journal, setting goals, preparing for the fall, which is the most active part of the year. It's also a good time to exercise patience and just be chill about your trading. Just listen to yourself, listen to your emotions when you're trading, and make sure you are always trading what you see versus what you feel. And once you put on a trade, let trades play out. You have the micros now. This is something I've fought for since 2012, and now they're here. And so you can put on small trades this time of year, just to make sure that just to test out your ideas and so on. It's a good time to refine and maintain what's already there and to be patient. That's my point. Good luck, and I'll catch you tomorrow. Take care.